In a world where financial markets are more like roller coasters, unpredictability is the new normal. Welcome back to Investify, where we delve into the depths of economic trends and predictions. Today, we're talking about something monumental, something that could redefine your financial future. The stage is set, the actors are in motion, but the script of our economic future is still being written. And one voice stands out in this narrative: Robert Kiyosaki, a name synonymous with financial wisdom and foresight. He's not just a spectator, but a keen analyst who's seen the patterns and read the signs. Kiyosaki's message is loud and clear. Brace yourselves for what could be the biggest stock market crash in our history. He calls it the everything bubble. It's not just a catchy phrase, but a dire warning. The markets are not just fluctuating. They're ballooning to a point where a burst seems inevitable. But this isn't just about stocks and bonds. The ripples of this impending crash are touching shores far and wide. From Europe to Asia, from economic powerhouses to emerging markets, the tremors are being felt. And amidst this chaos, there's a glaring void, a leadership crisis. The world is not just battling economic challenges, but also a leadership deficit, making these times even more precarious. In times like these, Kiyosaki's call for effective leadership resonates more than ever. Leadership that's not just about making decisions, but about steering the global economy away from the looming storm. It's a call to each one of us to step up, to be informed, and to be prepared. But it's not all doom and gloom. In every crisis lies opportunity. Today, we're not just preparing you for a potential financial downturn, we're unlocking opportunities. Opportunities that can emerge even in the darkest economic times. As we navigate through these turbulent economic waters, remember, knowledge is your lifeboat. Stay with us as we explore these challenges and opportunities, and equip you with the insight you need to not just survive, but thrive. Navigating the high seas of the stock market is no small feat, especially when a crash is on the horizon. But what if I told you that, like a well-scripted play, market crashes follow a three-act structure? This is where Robert Kiyosaki's insightful model comes into play, shedding light on the anatomy of a stock market crash. Act 1. The initial bounce. Picture this. The market takes a hit, but then, like a phoenix rising, it shows signs of recovery. This is the bear market rally, a deceptive glimmer of hope that lures investors back in. But Kiyosaki warns, this is just the beginning, and it's crucial to tread carefully. Act 2. Prolonged adversity, the toughening period. Here's where the storm intensifies. The markets don't just fall, they spiral, testing the resilience of every investor. Kiyosaki's advice? Use this time to sharpen your skills, to build resilience. It's in these testing times that the true mettle of an investor is forged. And finally, Act 3. Recovery, the application of skill. As the storm passes and the skies clear, it's time to put your newfound knowledge and experience to the test. This is where informed decisions come into play, where the skills honed in adversity become your greatest assets. Kiyosaki compares these phases to a storm: the initial strike, the peak turbulence, and finally, the clearing skies. Understanding this pattern is like having a weather map for the financial world. It helps you predict, prepare, and prosper. But remember, every investor's journey is unique. Your path through these phases will depend on your strategies, your resilience, and your willingness to learn. At Investify, we're here to guide you through each of these stages, to help you emerge not just unscathed, but victorious. Now, let's turn the page to a crucial chapter in our economic saga: the impact of money printing. It's a tale as old as time, but with consequences that are very much a reality of our modern world. When governments start printing money excessively, it's like opening Pandora's box. The immediate effect? Inflation. This isn't just a buzzword. It's a phenomenon that directly affects your wallet. Inflation means the cost of living goes up. The price of bread, milk, gas, essentials that we take for granted, start climbing. And who gets hit the hardest? It's often the most vulnerable populations, Those already struggling find it even harder to make ends meet. But the ripples of excessive money printing go deeper. There's a broader economic implication: the devaluation of currency. Your hard-earned savings start losing their value. The dollar, euro, yen you saved doesn't take you as far as it once did. This erosion of savings is a silent thief. It creeps up, gradually diminishing the purchasing power of your savings. It's a stark reminder of the fragility of our financial systems and the need for vigilance and smart financial planning. Understanding the impact of inflation is critical for every investor. It's not just about watching the market, it's about watching the very value of the currency in your pocket. If you're finding this content valuable and it's helping you navigate the complex world of finance, don't forget to subscribe to Investify. We're here to empower you with knowledge and insights every step of the way. And now, the final chapter of our journey today, where we transform challenges into victories. In the face of a market crash, the wise see not just obstacles, but opportunities. This is the essence of Robert Kiyosaki's approach to financial growth during tumultuous times. Kiyosaki's strategy is clear. View a market crash as a golden opportunity for financial growth. But how do you seize these opportunities? The key lies in empowerment through knowledge and self-reliance. Let's dive into one of the most tangible investment strategies: real estate. In a fluctuating market, the real estate sector offers unique opportunities. The trick is to adapt. Think about transforming office spaces, or focusing on sectors like warehousing and industrial properties. These are areas poised for growth, even in a downturn. Diversification is your ally. Investing in low-correlation assets, like art, gold, and cattle, can provide stability and growth. These assets often move independently of stock markets, making them a valuable part of a balanced investment portfolio. Preparing for a real estate market crash involves more than just bracing for impact. It's about securing your financial stability and strategically diversifying your investments. In times of uncertainty, tangible assets like gold and silver can be a safe haven, protecting your wealth against market volatility. So, what are the takeaways from our discussion today? First, financial preparedness is non-negotiable. Traditional financial advice might not always cut it. You need a proactive, self-reliant approach to financial planning. Second, keep an eye out for emerging real estate opportunities. They can be the silver lining in a market downturn. And lastly, never stop learning. Your financial education is your greatest asset in navigating market downturns. As we conclude today's episode, remember, at Investify, we're not just about providing information. We're about building a community of informed, empowered investors. If you enjoyed this video, found it informative, and are eager for more content like this, smash that like button and subscribe to our channel. Your engagement helps us grow and continue to bring you valuable content. So, hit like, subscribe, and join the Investify community for more insights into the world of finance. Until next time, keep investing, keep learning, and keep growing. This is Investify, signing off.